We are back. I want to say a quick RIP to Charlie Munger. That is a very sad way to start the show. An all-time legend in the world of investing. We're going to try to do Charlie proud. We'll be discussing the latest from the Fed, the Beige Book, some of the speakers, GDP data. Kevin's going to be talking about what's going on in Japan. He's on a gold spree right now. He's panning for gold. We'll be talking about all of that and more today on Money Never Sleeps. Welcome back, everybody. As we get started today, do us a favor. Hit that like button down below. Subscribe to the channel if you haven't yet. Nothing Kevin or I say is financial advice, so please do your own thorough research before making any sort of buys or sells. Kev, it's an interesting day in the markets. We're getting this back and forth, like this little ping pong back and forth between whether or not markets want to be up or down. Everything is kind of on pins and needles right now ahead of tomorrow's PCE data. We heard from the Fed today, through the Beige Book, through some of the president speaking that, most of them think that we're done raising. A few are going to leave the door open to additional rate hikes based on how inflation plays out. PCE from previous month was revised down. So there's been some discussion around that. What has your attention, though, as we hit the halfway point in the week?
Dude, it's got to be gold. It's got to be gold and global liquidity. It's just, it sounds like the most boring thing in the world. But I think
it is the most
boring. 100%. And I think it's, I mean, there's a reason why the older investors always say, you got to hoard gold. Whenever times get tough, always grab gold. I'm like, well, there's a couple of issues with gold, but my biggest issue with it is I think a lot of people do have the trade wrong. And I don't have confirmation of that, but we can look back to previous times in which gold has gotten around this level. And we also know that, just looking at previous recessions, 2008, even 2000, gold is always kind of a reactionary move that seems more uncertain than it seems risk off. I think it's something that people are just like, well, let me just put money here, park it for a period of time. Doesn't mean that it's going to be sustainable or going to all-time highs. So Peter Schiff, if you're watching this right now, I know you're not, but you're wrong. And I think it's probably going to be the dollar that's going to be face melting a lot of things moving forward. So that's what I've been keeping my eye on. We can talk about it when we get into the show, but also bonds, another bad day for the yields, just kind of giving us a bigger picture of what's to come. I don't know, man. I'm actually kind of optimistic about what we're anticipating. We might be right after all.
Hey, we'll see. I mean,
anything can happen
for a while now. Anything's possible.
But bad signs.
They're bad signs, but once again, it's just this. If we look at the charts so far this week for major indexes, it's been really, really boring. Like just trading in this range, because all anyone cares about is what the Fed is going to do next, right? Like it is totally Fed driven. And what data is the Fed going to be looking at? You're looking at inflation and unemployment. And we've also seen via the Beige Book that, to no one's surprise, we've been talking about this for I don't even know how long, discretionary spending is down. People are really having to tighten up. There's not as much, tourism, it looks like, is still doing pretty well. Like people are still traveling and stuff, but discretionary spending on electronics, appliances, all this stuff is down, as we thought it would be when things get tighter. And so to hear this continuing narrative of the consumer is as healthy as ever and U.S. households, they're not struggling, they're thriving right now. Bullshit, they are. Like that is just like the people talking out of the side of their mouth right now are talking squarely out of their asses. Would love you to believe that that's the case, but it just isn't. And so like we're not going to pretend like it's in a situation that we're not at this moment.
Dude, let's talk about GDP right now, because I think that's really important too, how we got revised up from the prior quarter. And I want to pull up this chart and let's just talk about what this means if the PCE came back revised down, but GDP went up, right? Just think about that in the grand scheme of things. And then we also got some information out of Germany today talking about their inflation. Just so people know, Germany's inflation is coming down like crazy. It's actually it's tanking right now. So let's take a look at this chart. This is the gross domestic product against gross domestic income. Gross domestic product, obviously how much, nations are producing versus how much people are earning within them. And we have a pretty good, gap right here. Let me just zoom in a little bit closer so we can see, where we are currently. The blue line is gross domestic product, and then GDI, gross domestic income, is the red line. You can see that there's a gap right in between here. So we're seeing that gross domestic income is actually coming down. And if we look at gross domestic product, it looks like it's going up. Now, the question is, we're always talking about demand. Are we seeing that there is more supply than there is demand? And especially since income is coming down, is there a good chance that we continue to see this gap widen? Or does gross domestic product start to come down over the next few quarters? That's something that we really need to keep an eye on, right? If we look back to 2008, which is probably one of the only other times I've seen this gap was widening here once again, right here in the middle. And then eventually it did contract to the point where they both came under, and they're both in the negative for, what was that, Q2 of 2009, which would be right after the market bottom and everything like that. So this is a very scary thing. We haven't seen it play out. Obviously, we were still waiting on Q4, so that we'll get that data soon. But there's a good chance that we could be seeing something very similar to this. But I think demand is absolutely drying up here. I think globally we're starting to see demand come down. And that's mainly because prices were too high for too long, but wages never kept up with it. So now people either don't feel like they need to pay for stuff right away, or they're just saying, you know what, I can't afford this right now. So either I'm going to wait, or I just don't need it anymore in my life. And that's going to eventually drive prices lower. But again, if prices go lower, people kind of have this mentality like, well, maybe it'll go lower the next day. And that kind of is a self-fulfilling prophecy of just nonstop prices just spiraling down. And then eventually just layoffs because there's not as much production from a lot of these companies and making money. So it's kind of a scary thought, but it's definitely something really interesting to see. And that's what I got from the GDP data this morning, also with the PCE being revised.
Interesting. I'm wondering how this is going to impact the giant red Christmas bow market. Like if you're going to, if you're used to buying your loved one's a Lexus for the holidays, for during a December to remember, is there going to be a decrease in the sales of giant red bows that go on top of said Lexuses? I'm not sure. Could be an area that we look at.
I did say this yesterday on Twitter. Keep your gift receipts. You don't like your cousins that much. They'll be just as happy with a hug, or just bake them a cake, bake them a fruit cake. That's all they need. That'll last them 10 recessions. That stuff doesn't expire ever.
Get them a bunch of boxes of Twinkies. Like those things are around for, fruit cakes. Those will go bad, but Twinkies, they'll be around forever.
That's true.
Yeah, there you go. The gift that keeps on giving. It's like a Jelly of the Month Club subscription, straight out of National Lampoon's. Okay, so that was some of the data around GDP. I mentioned the beige book. That was really the big takeaway. There was the fact that discretionary spending is continuing to go down, to no one's surprise. We are getting, like I said, we had 3 different Fed presidents who spoke earlier today. 2 of them made it very clear that they're comfortable with where rates are. Another one was a little bit more flexible as far as, if we see inflation come in hot, we need to be willing to go up in rates again. Now, I'll pull it up as I speak. I do not believe the expectations have changed at all. Like December is pretty much guaranteed unless something crazy happens tomorrow. But we're seeing about a 96% chance. Actually, it's up a little bit today. So yesterday it was 99.7% chance of no rate hike. Now it's at 96%. So we see a little move there. Nothing significant, obviously. But tomorrow is what is going to be very telling with PCE. The expectations are at this point in time that we see PCE coming down year over year on core to 3.5%. The expectation monthly is 0.2%. And those are also the same expectations, 0.2% for personal income and personal spending. If 3.5, if it's coming down after stagnating, that's positive. If it doesn't change, or God forbid, if it goes up, look out. It's going to be, and that's why I think maybe if you're short term, maybe the play is just playing this swing tomorrow if you think that we are going to see that number come in, because I think markets will respond positively. I think they will begin to price in maybe a rate hike a bit sooner. I want to go into it now. Currently, the data I'm looking at suggests that the most likely outcome for a rate cut would be March. Bill Ackman, famously well-known billionaire, said that he thinks that they're going to start cutting sooner than people expect. Maybe he's pointing toward January. The data currently shows the most likely outcomes actually May 1st. Looks like a greater, about a 76% probability of rate cuts by the May 1st meeting of next year. Could see if we get a good inflation reading tomorrow, maybe they start to price it in even sooner, and that leads to a continued pump in the markets. That to me would be once again, like sounding bearish, but a potential, if you're a short-term trader, a sell the news kind of a situation right there. Like if it's really good news tomorrow, I think it's a selling opportunity. And if we start to go, if it's a bad data reading tomorrow and we start to go down, I'm probably not buying that dip. I'm just going to keep waiting and then eventually buy.
Yeah, man. I said this last night too on Twitter, and I think I alluded to it yesterday. I don't believe that we're going back into hyperinflation. I think that it's kind of over at that point. I think the Fed has tightened so significantly to the point that things are coming down. Unfortunately, it's not the things that we kind of need, right? Food is still relatively high, shelter is still relatively high, but energy I think is a really good indicator, leading indicator of where demand is sitting. And I think that we're also seeing demand globally just kind of dry up. I was telling you about China. China's losing their exports. Like the exports are down significantly, and that's not a good sign. That's going to definitely impact Japan in itself. But for the U.S. in this PCE data, maybe it comes in a little bit under expectations. Maybe not as maybe it comes in below what it currently is, and then it's not at expectations, so the markets don't necessarily know how to read it. Or maybe it just comes in below expectations and markets, rally a little bit further up here. I think it's going to be really interesting to see. I don't think it's the important data, though. I think this is going to be in tandem with what we are going to see next Friday with unemployment. It's going to be probably the most important data set. Unemployment's key here because if PCE is going down, but unemployment's rising, then that shows you that we might be heading towards deflation. So that's my big takeaway from tomorrow. I'm not trading it. I'm sure the Forex currencies are going to go wild tomorrow. They always do whenever we get any of that PCE data or Powell speaks or any of the FOMC stuff. So just something to keep in mind.
All right, good deal. Let's get into some of the charts. We don't need to make this too long today. We'll have plenty to talk about tomorrow, but I do want to look at some of the charts.
Definitely. Should I start with my big one that I'm not fond of the trade right now? Gold.
Yeah, go for it.
All right. So this is gold, right? It's kicking ass, right? And it is. I'm not shitting on gold at all. It's in this massive channel that's going up. I just want to delete this so we can see this a little bit better. But it's been going up nonstop for the past few days. And when we kind of take a look at this, everyone's saying that, this is the reason you should be keeping an eye on gold. This means it's going to go up higher and higher. Peter Schiff is saying that the Fed is pretty much lost and that we're going to see a crash to the point where gold just takes off and hyperinflation kicks back in. I am making the opposite argument. I'm saying that gold is not necessarily a sign of risk off. I think that's something that we keep telling ourselves. I think it's a sign of uncertainty. And I'm going to go back to the last time it pumped up to this area, which was back in May of 2023. And that was post, and we can see where it started pumping from March all the way to May. So what happened in between this time? We had all the bank crisis. We had First Republic, Signature, Silicon Valley Bank. And then once all the fears kind of, faded away, bank term funding program seemed like a lot of the banks, the liquidity was kind of coming back into the system. Gold starts coming down, right? So clearly there was risk if you were buying up in this range. Now we're back here. We're in, October, the markets are going down pretty good. And we're starting to see this pick up. We were getting a lot of that stuff about, the House and the budget deficit, all those things. Obviously, the Israel-Hamas war, that's coming up here. Where we are currently, a lot of people are afraid. I think that we're just getting to the point where we're kind of just filling out this channel. And eventually, if something bad does happen, you say it's a debt or a liquidity crisis, the thing that's bad about some of these assets is that you're going to be holding something that's only worth what the next guy's willing to pay, right? Whereas if you look at the US dollar, that's, if you want to say it's 1-to-1, it is. Obviously, the U.S. government's going to back it's the world reserve currency, but that just means that people are holding an asset that's overpriced. And now that they know where the market's going, they're probably going to sell off, in my opinion. And then we might see some of the uncertainty pick back up if the market bottoms afterwards. And we could look at that back to even 2008. Let's see where we are in 2008. Obviously, gold was wild back then. But you can see there was a lot of fears around Bear Stearns. It led all the way up into Bear Stearns. Things kind of subsided. They said everything's all right, right? And then eventually when we got to the we started to see the crash, back in November. It kept going to the bottom. Now we're starting to see gold rally once again, and gold rallied for roughly 2-3 years there, and it makes a lot of sense because we had a lot of crises that did happen between 2009 all the way to 2011. Right, our U.S. credit got downgraded. There was a lot of issues in England at the time. Europe was in a bad state post recession, 2008 great financial crisis recession. So I think that this trade is very. I think people are on the wrong side of this trade thinking that this thing is going to go up forever. I think we're in a parallel channel. And if we look at where gold's hit in this range before, it could be a quad top. July 2020, obviously COVID, that's when we were back up here. March 2022, that's the top of the market. When stuff started to sell off, they were afraid of inflation, came all the way back up there. Banking crisis back in May of 2023. And then, after it was climbing into May 2023. And then where we are right now, why are we getting up here? Are people sure that we're going to be getting out of this? Is this kind of like another thing of, I don't necessarily know where to put my money. I'm not bullish, but at the same time, I just don't want to have exposure to assets, but I think there's a way to make money. Maybe that's gold right here. So I think that this is a warning. We should be very wary of. Look at the stochastic on this. Overbought on the daily. If you look at the weekly, overbought. If you look at the monthly, it's about to go into overbought. We got a day and a half left of this month. It's probably going to be up there by the next time you see it. And I think we're going to get a quad top 4 across there. Not necessarily a great sign. I think that could be, we can say distribution, but I think what it is we're finding resistance for gold. I'm not going to get super bullish. Could it go up a little bit higher? Sure. I don't think it's going to be sustained though. I think we're heading to a place where the US dollar is going to be most important because our facing crisis amounts to debt. And people need to pay that debt off. And the only way they have to do that is the US dollar. If we're going deflationary too, that just naturally means the dollar is going to go stronger against risk assets, right? Risk assets depreciate in value. People don't have the money to do spending. They need money on hand so that they can pay off some of that debt. Everything else is just going to tank with it. So I'm not bullish on gold at all. I think a lot of people are. It's up to them. I'm not, I'm not in charge of your trading account, but I do think that the dollar 100% is going to be the most lucrative asset the next 6 months, even next year.
Okay. Let's go through, crypto has been pretty flat over the last 24 hours. I don't know how much time we really need to spend there. Unless there's anything that's caught your eye.
Yeah, it's been boring in crypto, hasn't it? It's been back and forth. Like I said, we're still in a distribution range. I don't necessarily buy into it. I do want to look into some stocks, so we'll just take a look at crypto real quick. But this is a crap pattern. I'm sorry. There's no other way to say this. This is just what the hell is going on over here. It's just going up in this massive bear flag, and it 100% is a bear flag.
I want to actually real quick. Can we go to ETH? I had one question I forgot to ask yesterday, and I'm looking at it now. So I'm looking on the daily, and we kind of had like a little situation where yesterday it looked like it was moving back from oversold toward overbought, and then it took a little bit of a U-turn back down, and now it's actually continuing back up toward the overbought territory. What is that? Does that really tell you anything? Like, is that in the past on the? I don't know if it's a different, because I'm looking at Coinbase.
Gotcha. Let me check that real quick. It might just be different volumes. Again, Coinbase has actually seen an influx of volume because of Binance and all that recently, so I wouldn't be surprised. Are you talking about down here?
Yeah.
Yeah, so I would think that just means that volume, it seems like volume did pick up a little bit in this range, or at least it's volatile, right? So you get a little bit of buying here, but then you get a good amount of selling. So it means it brings the stochastic down, got a decent candle of buying, maybe pulls it up a little bit. What this tells me is that not only is this distribution, it's also just, a lot of uncertainty. And it kind of goes along with that gold trade where people aren't really sure where to put their money in the markets right now. If they want to be holding crypto, if they think it's going to go up, if this ETF gets approved, or if we're just seeing, people just trading this. And we have seen that there is a large supply of crypto out there, especially ETH and Bitcoin, that have been trading recently. I think a lot of other coins are also waiting for Bitcoin to make a move. So I think that this is a bit of volatility here. I do want to pull up one thing that kind of works to see why we're seeing some of this maybe with ETH. And that could be because Bitcoin dominance, again, is gapping up, it is pushing to the upside. So I think that it's losing strength in its BTC or ETH to BTC pairs as well. So that's another thing that could be affecting the price and some of the momentum, a lot of these moves. It just seems like those are the ones that are going to be getting the most volume. Sure, the prices of some of these other coins are going up and down, but I think that's a matter of liquidity, not necessarily a matter of, volume of people trading, Link, AVAX, and all that stuff. Still has a smaller market cap compared to ETH and Bitcoin. Those are the ones that are going to be moving the most. But yeah, I think that we're seeing a lot of that short-term price volatility in ETH, most likely because people aren't really sure which direction the market is. It's kind of a long way to say that. I mean, look how many times we got rejected here. Once, twice. They got a double top there. I mean, we hit it back here in April of 2023. You know, in the past, we broke through this as key level support. We bounced off it in the past as well. So this is a really tricky level. It's like, do we want to be bullish here? Is it going to push up? Do I really believe that there's going to be enough money that kind of comes in and pulls me up so I don't have to take a loss? That's what I think that we're seeing a lot of that in the stochastic, because that does take care of the open, the close, the buy, the high, the low, pretty much of all those technical data points throughout the day.
Okay. Good deal there. What stocks did you want to look at? Were we going to go into a little bit of Tesla, some Coinbase?
Got to do Tesla, man.
Yeah.
The big lie, right? So everybody
should save everything.
Save everything?
Yep.
I didn't. Oh, the Cybertruck, yeah.
Yeah, the Cybertruck.
Dude, I want a Cybertruck, but I'm not going to pay for one right now at these rates. I want to pay for it in cash. See, the dollar is going to be most important, but everyone is going ape shit into this Cybertruck, right? And they're thinking that, oh, look at this parallel channel. This is a bull flag right here. It's like, okay, but you're putting a bear flag within a bull flag, right? And you're finding resistance already up here, and you're buying into something that's already kind of been priced into the market. We know that the Cybertrucks are coming out tomorrow, right? I think people were buying into the fact that this news is coming out. What's it going to do for you? Are people going to start buying Teslas? I don't think people have the funds to be buying Teslas moving forward unless you're using PayPal, Affirm, Klarna, one of those payment programs. But if we're looking at this here, this is no different than what I'm seeing everywhere else. This is just a corrective pattern. I mean, this is pretty much, beat for beat a corrective pattern. I can't tell. Let's see if this is it. Is this an ABC? No, that seems like it's even more than that. It looks like it's possibly a 5-wave, but it's just putting in this massive parallel channel. We're extremely overbought. We're finding resistance here on the parallel channel. I mean, look, we found it right here. Eventually, this is going to break down. We had a massive gap that we had to fill from when we dumped from roughly 244 down to 230. We filled that. We got some gaps down here now. So we have to start looking, hey, is there a good chance that we could fill out some of these, especially down here? And the other thing people are forgetting is, look what's there on the daily. You can't really see it because I got so much shit on my chart. But let's remove some of this. Remove this too. You almost got a death cross a few days ago. Tesla almost got a death cross. This is a death cross rally. This is 100% what we've seen across a lot of other indexes and a lot of other stocks. So I'm not sold on Tesla, pushing up from here. I think that if anything, we look at this, we're zooming out. It's like, okay, once again, another lower high. And it's been pretty spot on how this has been pretty much resistance this entire time. I mean, that's perfect, right? I didn't even realize that till now. So that's what we're kind of sitting at. Is it putting in a massive parallel channel? It could be, right? We could be talking about this going months and months into the future. We could see something like this play out, right? Something like that. But there's a good chance that it could just come back right down to some of these lower lows. And if, say sentiment gets worse, it could just tail off completely. I think we are going to put a death cross in fairly soon, given that the daily is extremely overbought. The weekly, we got to keep an eye on because that does have some room to the upside. I think with how green it is this week, if we stay up in the positive this week, there's a good chance that this is going to get close to overbought. But I do think it could be something very similar to what we saw back here in March of 2022, where we don't get to the extremely overbought. We just kind of tail off at the top and we start to pull back here. I think out of all the Magnificent Seven, Tesla might be in the biggest position to face the most headwind just because how reliant it is on consumers buying their products. Their products aren't cheap, right? So if they produce too much and they have to keep cutting costs, that's just going to hurt their margins the entire time. I don't necessarily think that Tesla is going to be going into a massive bull market here, but we have to see how this plays out because at the end of the day, it is putting in a bull flag at some point. It's going to move to the upside. The question is, does it, go to the bottom of this or does it move up from here? I don't necessarily know if after a move that we've seen, we're going to continue pushing up. That's just my thesis on that.
All right.
Let's see what else we got.
What else stock wise?
Let's take a look at the bank stocks because those are absolutely ripping today, right? Let's look at Bank of America, up 2.78%. Citigroup up 1.83%. Schwab 6.81%. PNC 2.72%. UBS 4.01%. What else we got here? KeyBank, guys, 4.11%. Now we have to ask ourselves, why are these banks pumping? Well, I don't know. I think it's very fishy that they're pumping because out of all these banks, these are the ones that have the most exposure to FHLB and BTFP. A lot of these banks are the next ones that were very similar, data sets to what we saw back in, what was that? March, when we were looking at March 2023, obviously the banking crisis. They had a lot of their data is very similar to Silicon Valley Bank, First Republic, Signature. So these banks that have an extremely high amount of FHLB operating as their percentage of equity. I mean, the next one that was in line was Schwab. And it's also, I mean, you can see how much I love Schwab, how much shit I'm giving on the chart, but Schwab was one that was very, very close to being, almost identical to some of those other banks. The only difference is that Schwab didn't have a lot of money in their accounts, meaning a lot of accounts over $250,000 worth of deposits. But if I'm looking at this is a 5-way move down here. This is this entire move that we got up here on the weekly. Now we're extremely overbought. We're finding rejection on the 50 moving average on the weekly. This is a 3-way move up. So we can say A, B, C. I would anticipate that we have a 5-way move down. We're getting rejection there, maybe there, something like this. Retest it, come down, and then we'll see where we are in the markets. But I think that a lot of these banks are just having a bit of a rally here. I don't necessarily know if it's going to be sustained or not. I mean, this one just looks like it's ready to break down too. This is Wells Fargo, just consolidating in this range for the longest period of time. It's between the 200 and the 50. If that doesn't hold, extremely overbought, something to keep in mind. And then UBS. UBS has actually been having a lot of really interesting things they've been saying lately. Now they're saying that there's a good chance that the next crisis comes from private credit, private debt. I'm really interested in see why they're saying that. We just saw that the second largest bank in Switzerland did have a really bad day yesterday. It had I think it was like down 4% or so. UBS was also saying that even in the worst case scenario, they do have people that are willing to buy the bank if something were to happen. Now, Switzerland doesn't want this to happen. And that's why I think it's really interesting that that's up 4% or so today, is because UBS is very much has exposure to Credit Suisse. They acquired them, right? So now all the bad, assets that Credit Suisse had, now they're UBS's problem. So whether they, are in a place where they're going to be fine going forward, or if they're going to actually start to realize some of those losses from acquiring Credit Suisse, well, then I think that remains to be seen. But I'm personally not bullish on Credit Suisse. I think that the Swiss banking system is in a bad place right now. And I think that also comes back to the dollar. Again, debt, where I think the euro is probably going to take a pretty good tumble. I think the Japanese yen is probably going to take a good tumble. And I think the dollar is going to be the one that rises. And that's not going to help them. They're going to want U.S. cash. They're going to want U.S. dollar, the world reserve currency, to pay off some of that debt if it comes to fruition. But I do think that there are a lot of banks that are in places to start realizing some of that debt. HSBC, I think they're expecting to realize $6 point something billion worth of debt losses, or actual realized losses, due to a lot of what's happening in China's property sector. So a lot of these banks are starting to realize losses, and they're also hoarding up on cash like crazy. T-bills, US dollars, they're not necessarily holding tons of assets. So it's really interesting to see that all these banks that are in a pretty bad place back in March today are all pumping equally together in tandem. There's a lot of signs out there we need to be keeping an eye on. I think the banks are preparing for another crisis. What it is, I have no idea. I tweeted about it earlier. It's a great video you can watch on Jeffrey Snyder's channel. He's a guy that's been following pretty much all the foreign reverse repos and seeing where all these banks are just, building up these cushions of cash, because they're not holding anything else but cash right now. So that's why I'm very bullish on the dollar. And when I see this, it's very scary to be to believe that these banks are coming back. I think that there is probably some headwinds. I don't know when. I'm not going to say what the next credit crisis or whatever it is coming. But it's really interesting to me that the banks are doing so well today, when if we look at the regular stock market, the S&P, we're down 5 points, down 25, and the NASDAQ and the Dow is up 18. So there's a lot of conflicting signs here, guys. I don't necessarily buy any of it. Doesn't pass the smell test for me.
Stinks is what it does. All right. That is going to do it for today's show. We'll be back tomorrow, same time, same place, discussing the latest round of PCE data, personal income, personal spending, all that good stuff, how it's impacting the markets, how that's going to drive Fed decisions moving forward, and what the fuck they're going to do with this whole big mess that they've created. So appreciate everybody for watching today. If you have not yet, hit that like button down below, subscribe to our channel, drop a comment, share us on social media. All of that stuff would mean the world. We appreciate it. Thank you so much for being here with us today, Randy. As always, you are the man. Mr. House, whoever else is watching, Chris, Ace, any of you guys, appreciate you as always. Have a great rest of your day. Stay safe in the markets, and we'll see you tomorrow.
Take care, everyone.